Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I am Boon Heng, market economist at Mizuho Bank. This week's theme is conflict, uncertainty, and central banks. Attention turned away from trade to geopolitical risks in the Middle East in the past week. Iran-Israel tensions set risk sentiments and supported Brent crude's continued ascendancy. Brent crude climbed more than 2% to $76 per barrel, while the S&P 500 was little changed. Global equities were largely down for last week. Against this backdrop, a cautious view on outlook was revealed in a slew of central bank decisions. The Fed stayed on hold as widely expected. The median of the dot plot retained expectations of 2 rate cuts for 2025, despite a discernible hawkish drift in the dot plot, amid a distinct downshift in growth and upside revisions to inflation forecasts. In Japan, the BOJ stood pat as expected and reduced the pace of bond buying from the next FY to quarterly reductions of 200 billion from the current 400 billion. The Riksbank lowered its key rate to 2% to support growth in the economy and signaled potential for further cuts. The BOE held rates at 4.25% in a 6-3 vote as policymakers weighed up UK's softening jobs market and weak growth against a backdrop of mounting geopolitical tensions. The Swiss National Bank cut policy rate by 25 basis points to 0% and signaled readiness to ease further in an attempt to temper the Swiss franc's strength, which had pushed inflation into deflationary territory in May. The central bank noted that developments abroad is the main risk to the Swiss economy. The Norges Bank surprised markets with a 25 basis point cut, reducing the benchmark interest rate from 4.5% to 4.25% as the inflation outlook was revised lower. The Norges Bank's updated risk forecast saw the policy rate below 4% at end 2025, suggesting more cuts ahead. In Asia, Bank Indonesia stood pat to support the rupiah amid global trade war and Middle East conflicts. Nonetheless, the Bank Indonesia's easing bias remains as it continues to look for room to ease. In Taiwan, the CBC kept policy rate unchanged on expectations of very high uncertainty going into the second half of 2025. 2025 growth forecast was retained at 3.05%, while inflation forecast was slightly lowered to 1.8%. In Philippines, the BSP cut policy rate by 25 basis points, with 2025 risk-adjusted inflation forecast revised lower to 1.6% from 2.3%, and with a more subdued view on the growth outlook. Over the weekend, the conflict saw a significant escalation as the US joined Israel to fire bunker buster bombs at Iran's nuclear facilities. This morning, the dollar starts on the front foot, with Brent crude prices surging above $81 per barrel at the open, before easing towards $79 per barrel. For the week ahead, Bank of Thailand is expected to proceed with an insurance cut. Our out of consensus expectations takes into account higher NPLs across all categories, weak private consumption, and a lack of progress on a trade deal. All in, while markets may be somewhat desensitized to headlines on geopolitical flares, as evidenced in a more modest climbing crude, tail risks of a sharp sell-off in risk assets on a more significant escalation have increased materially. For more information, please refer to our week ahead publication or contact your respective sales desk and our apps. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.